Today we'll discuss Ind AS 113, that is fair value measurement. To define the measure of fair value, single source of measurement, fair value, which applies to given respective standards. Fair value is defined as a cost to sell an asset or paid to transfer a liability in an orderly transaction between market participants at measurement date. Hence, fair value is a market-based measurement and not an entity-based measurement. Uh, what entity intends to do with the asset is not relevant, but what market intends to do with the asset is important. Land use a factory by the entity, but residential use of land would fetch a higher price in the market, hence fair value would be determined as per the residential use. Fair value is basically the exit price for liability. It is the price to transfer the liability, hence settlement is not the criteria. Settlement of liability is not equal to transfer of liability. Price at which market participants is willing to take over the liability. It is a market-based measurement and not an entity-based measurement. Observable inputs like share price on the NSE, uh, ob- uh, unobservable inputs like price to be determined for intangible assets. If the observable input is not available, then be the technique which maximizes the observable data and minimizes the unobservable data. Uh, for example, uh, Coca-Cola takes over a lesser value player, hence the intangible asset of a smaller player would not be used from on the market participant willing to pay and not Coca-Cola. Hence the market-based assessment and not a entity-based measurement. Characteristics of asset or liability conditions plus location, restriction to sell or transfer the asset, place in a rural area or urban area. Uh, NGO has land which can be used as a playground by the NGO. But if NGO wants to sell the land for anything, for the example, commercial purpose or residential purpose, hence the NGO perspective of fair value would not be the price that the market participants will pay. It will be the commercial price or the residential price, whichever is higher, would determine the fair value of the land. Mr. Wright purchased a helicopter for private use, and there is a restriction to not use the helicopter for any commercial purposes. The fair value of the helicopter for commercial purposes is greater than that of the helicopter for private use. Hence, the restriction of the asset is specific to the market participants and would not be for the determining the fair value. Hence, the helicopter would would be used if the commercial price, which is a higher price for the helicopter, the fair value would be the commercial price for the helicopter. City Corp has certain shares that are pledged with the bank. These shares are restricted to be sold for the next 5 years. In the use of restriction to sell entity specific, hence it will not be considered while calculating the fair value. Other key concepts and definitions: orderly transaction is a transaction that that is exposure to the market for a period of on or before the measurement date. An orderly transaction is not a forced transaction. Example, liquidation or distress sale would not be an orderly transaction. Transaction with reduced volume is also not an orderly transaction. Example, COVID time transactions would not be an orderly transaction. Transaction circumstances may indicate that the transaction may not be orderly. Inadequate exposure to the market for a period before the measurement date. Marketed to a single market participant. Seller is in bankruptcy. Transaction price is an outlier. Example, share price is 1700 and that is not the normal share price. Hence, it will not be an orderly transaction. Mr. John, an investor, pays 50 million to purchase a rare painting at a public auction. The seller had advertised for the rare paintings a month ago, uh, and opted for 10 people to the auction. A total of 15 individual parts were placed bids on the rare painting. All bidders were provided with the same information and ability to view the painting. Is this an orderly transaction? Is the painting marketed to a single buyer? No, the painting is not marketed to a single buyer as it was open for public and 15 individuals placed the bids. Hence, it is an orderly transaction. Market participant, buyers and sellers in principal market should be independent, knowledgeable, able to enter into a transaction and billing. Principal market and most advantageous market. Principal market, the market with greatest volume and greatest level of activities would be principal market. If the principal market does not exist, then the market which maximizes the amount of revenue for the asset or minimizes the amount of transferring of liability after taking into account the transaction cost and transportation cost would be the would determine the most advantageous market. If a market cannot be assessed, it will not be regarded as principal market. Principal market and most advantageous market is from entity perspective. Example, assume Citicorp normally buys and sells markets C holds and assets that is traded in different markets. Market A, Market B, Market C. Annual volume 30,000, Market B 12,000, Market C 6,000. Uh, Number of transactions 30, 12, 10. Price is 50, 48, 53. Transportation cost is 334. Possible fair value would be 47, 45, 49. Transaction cost would be 1 to 1 and net proceeds would be 46, 43, 48. So principal market A has got the maximum volume. Hence, market A would be the principal market, and the price would be determined. Fair value would be after taking into consideration the transportation cost only, and not the transaction cost. Hence, the fair value for principal market A would be 47 uh, 47. And to determine the most advantageous market, we'll have to deduct transportation cost, transaction costs as well. So after deducting transaction costs, market B has a value of 43 and market C has a value of 48. Hence, market C would be the most advantageous market, and the fair value would be after deducting the transportation cost of 4. So 49 would be the fair value for the most advantageous market. Measurement of fair value uh, under Ind AS 113. Determine determine unit of account. Difference between non-financial asset, financial assets, liabilities, and equity. Access to observable market. Is there a principal market? What is the most advantageous market? Develop most likely or not. So there are three concepts: market approach, income approach, and cost approach. So a market approach is the fair value as per the market price, and cost approach is current replacement cost approach, and income approach is discounted cash flow approach, present value of cash inflows minus present value of cash outflows. Uh, Determine the unit of account. Uh, Non-financial assets like PPE, highest and best use concept is to be used. Determine principal market or most advantageous market. Determine valuation. Income approach, market approach, cost approach, inputs, valuation technique L1, L2, L3. Unit of account, uh, uh, unit of account, uh, level of at which the asset or liability is aggregated or disaggregated for recognition purposes. It is a single asset or CGU or group of assets. Uh, Ind AS 113 does not give unit of account, it gives the respective unit of account as per respective Ind AS. Conditions, conditions, uh, uh, conditions, and restriction to sell. FCT Corp holds equity instruments in ASP, ADSPL. However, any potential sale of these equity shares is contractually restricted for a specified period and can be sold transferred to select categories of investors. Is this restriction characteristics of the instrument? How should the fair value be determined? This restriction is characteristics of the instrument, and instrument would be transferred to market participants. Hence, fair value would be measured based on the quoted price minus the restriction to sell. So, if the restriction to sell is valued at $2 and market price is $100, 100 minus $2 would be the fair value. Highest and best use for non-financial assets. If NGO has a land which can be used as a playground, if NGO sells the lands, then it can use it for commercial purpose, and the fair value is 100, residential purpose, and the fair value is 120, parking, and the fair value is 90, and factory, then the fair value is 180. Then the fair value in the set case would be the highest, which is the factory, that is 180. If the land is 1,000 square feet and cannot be used as a factory, then residential use of land, that is 120, would be the fair value of the asset. uh, Principal market and most advantageous market. Uh, we have to determine the principal market and the most advantageous market. Market approach, cost approach, and income approach. When market price is relevant information, use the price of uh, identifiable assets. It is used in case of equity shares, real estate, investment property, land and building. Replacement cost approach is the replace cost approach is the replacement cost approach. It is used in case of tangible items like factory, plant and machinery. Income approach, discounted cash flows is used in case of intangible assets, financial instruments, liability, and business cost. Uh, so, if market approach, cost approach, and income approach gives different value, that is 100, 80, and 140, then a range could be used 80 to 140 to determine the fair value. Replacement cost 10,000 metric tons of glass uh, uh, takes into about there's the replacement cost of 10,000 metric tons of glass in the factory would be different. Hence, the replacement cost approach would be used. Income approach. uh, Income approach, discounted cash flows. Consistency in using approach, valuation technique should be used and it should be consistently applied. Uh, Fair value hierarchy. Fair value hierarchy, market approach is L1, cost approach is L2, and income approach is L3. MCI is the uh, methodology used for L1, L2, and L3. Fair value, if the fair value less cost to sell is there, the cost to sell is to be ignored. Application issues. Fair value of initial recognition. Exit price might not be equal to purchase price. Liability price might not be the exit price. If the transaction between related party transaction is forced, uh, unit of account is different, then the unit of account is measured as fair value. Determination of fair value in financial instruments. It will be the uh, uh, income approach, that is present value of cash inflows minus present value of cash outflows. Is there a quoted price for uh, similar uh, debentures? If yes, uh, can it be used as identifiable asset? No, the discounted cash flow technique is to be use. This brings us to the end of the session. Please do like, subscribe the channel. Thank you so much.